Welcome to Tech News Briefing. It's Thursday, June 29th. I'm Julie Chang for the Wall Street Journal, filling in for Zoe Thomas. Clean energy companies have seen some welcome news lately. Their stocks have been climbing after being battered over the past year and a half. And leading the surge is none other than electric vehicle maker Tesla. Companies and investors are now closely watching to see if the rally will help sustain them until certain climate law subsidies kick in. WSJ climate finance reporter Amrith Ramkumar has also been monitoring the trend, and he joins us now to explain what's been happening. Amrith, clean energy stocks have seen a boon recently, but before they were struggling. Can you tell us why they weren't doing so well in the first place?
Sure, it's been a really bad and hard 18 months or so for a lot of clean energy companies. Interest rates have gone up at a historically fast pace, and that's really bad if you're a startup trying to borrow money and grow your business quickly. A lot of consumers also need to borrow for things like solar projects and electric car purchases, so higher rates can really pinch a lot of that behavior. And then they've also been battered by all the supply chain disruptions that have come out of the pandemic. So the recent rebound has been a welcome thing for a lot of investors.
So then why are they rebounding now?
The simplest reason they're rebounding is a lot of momentum around technology stocks in general. Again, we've seen a broader rally tied to artificial intelligence, and that gave Tesla, the most popular clean energy stock and the largest, a huge boost. So Tesla stock has rebounded something like 40% since mid-May. So Tesla started rallying, and that sort of spread into a lot of other startups that people are really excited about, that they think can take advantage of future technology. And we also have to remember there's this tidal wave of government subsidies and spending tied to the Inflation Reduction Act, last year's climate law, that is benefiting a lot of these companies, including Tesla. So all of that excitement starts pushing these stocks up, and then a lot of investors get FOMO, the fear of missing out. Once they start seeing Tesla rally and the stock is up like 100% this year, they're like, oh, wow, I better get back into this. So that's a big part of it. A lot of people also think the run-up has already gone too far. They think Tesla faces fundamental challenges to its business. Its valuation now looks stretched again relative to its near-term earnings. So some people expect this to be a really volatile sector.
So Tesla is a pretty big winner at the moment. What are some other companies that are seeing their stocks go up? Who else might be winning here?
I would say some of the biggest winners are companies like Nikola, a really battered hydrogen fuel cell truck startup that has been very controversial. If you'll recall, founder Trevor Milton was basically convicted of misleading investors when Nikola went public, and the stock has really cratered and fell below $1 a share earlier this year. It previously was above $10, $15 a share. And also the company is just burning through its cash and in danger of potentially having to file for bankruptcy. And then all of a sudden, in the past few weeks, the stock has roughly doubled, back above $1. And if that surge continues for Nikola and other startups that are, again, burning through their cash, some people think that they could survive long enough to take advantage of all of these subsidies coming online from the federal government for things like hydrogen. A lot of other startups like STEM, an energy storage company, and Plug Power, a hydrogen startup, have also gone up a bit. QuantumScape, a battery company. So a lot of these speculative companies that investors expect to be big in 2026, 2027, those are the ones that are getting on the up and up again after a long downturn.
And any companies that maybe aren't benefiting as much?
So one company that has been super volatile recently is Lucid, a maker of luxury electric cars that went public a few years ago with a huge valuation. Saudi Arabia's public investment fund is by far their largest investor. So Lucid stock has fallen overall in June after they've had to raise money from investors at a much lower valuation than where they went public. But in a kind of another example of how volatile these things are, Lucid stock has gone up a lot the last few days after Aston Martin said it would use some of its technology and they would basically have a partnership moving forward. So these names will continue to be super volatile and risky, but the overall point is that investors are starting to warm up to some of that risk again.
So you touched on this a few times already, but how big of a role is the government playing in this?
The government is a huge part of this rally. This mountain of cash is just too large for a lot of investors to ignore. Tesla is going to be a big beneficiary to the tune of billions of dollars across all of their domestic manufacturing, and a lot of their vehicles qualify for electric car tax credits in the Inflation Reduction Act that consumers buy. But the bigger boost to Tesla is probably for their charging business, people think, because the government is expected to spend billions of dollars on this national charger network, and Tesla is becoming a standard in that area. And a lot of these other startups basically are dependent in some ways on these subsidies to bring down the cost of their products, especially new ones like hydrogen. And the government could cover 50% of a project's cost, a lot of analysts estimate, for hydrogen, for batteries, whatever the case might be. So if you're a startup, you're not profitable yet, that dramatically changes your timeline. And if you're an investor, you have to be really aware of that. And a lot of people are looking ahead to those tax credits really kicking in a big way in the coming years.
Amrith, you've been speaking with traders and analysts. What do they say about how risky it is to invest in clean energy stocks at the moment and going forward?
Most people say they're high risk, high reward. The risk here to investors is definitely short-term profits not materializing and costs staying high for a lot of these companies in the near term. Interest rates still haven't gone down yet, and a lot of investors are acting like they're about to fall off a cliff. And the Fed has already warned that they might need to keep rates higher for longer to bring down inflation. But the reward, again, long-term, you have this tidal wave of government cash. So investors are expecting these stocks to remain very volatile, but a lot of them remain really confident looking out 10, 15 years.
All right, that was our reporter, Amrith Ramkumar. And that is it for today's Tech News Briefing. For more tech stories, check out our website, WSJ.com. I'm Julie Chang for the Wall Street Journal. Thanks for listening.